The stock of the day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
Mark felt left out, but we didn't have the Christmas balls behind him, and just like that, his wish is our command.
I feel special.
Yeah. All right, our stock of the day. Thought we'd take a look at Paladin Energy. Has been granted clearance for an acquisition of fission uranium. The merger is expected to close by January. We'll see Paladin take a significant step towards creating a leading uranium producer. Paladin shares will be listed on the Toronto Stock Exchange once the merger is complete. Mark Gardner from MPC, what do you think of the announcement and Paladin stock in general?
I like the announcement. This was my Advent pick last year, which obviously I think at the time it was 90 cents, which is the equivalent of $9. We sold around 17.
Yep.
And we're looking at basically just switching to the ETF for a little bit more of a diversified exposure, which was a bit more stable. But we're switching back. To be honest, I think this is pretty decent value here. It's the most shorted stock on the ASX at the moment. But look, this is below. I mean, this is the equivalent of what it was, 78 cents or whatever. It's now in production. It's now got cash flow. It's going to make it the third biggest uranium producer, I think. Once that goes through, so obviously that chart's
in the world,
very
the third
deceiving.
biggest in the world.
I think third biggest in the world,
Right,
yeah.
yep.
So, and look, I don't think, the nuclear thematic's not going away. You've got the likes of Microsoft, obviously recommissioning 3 Mile Island with Constellation there and basically guaranteeing that they'll take the power supply for the data centres, etc. Amazon's looking at small modular reactors. And, it's the sensible solution for base load. It's not, if we're going to go anywhere near the Paris Accord, which it's probably unlikely by 2050, but it's not really going to be done by renewables, and obviously data centres need reliable energy, and the only way you're going to get that is really with nuclear. So I think the energy transition and the AI boom both together are probably going to be a pretty good tailwind for both uranium and copper for the next couple of years. But this is a bumpy ride. I mean, like I said, I wrecked this last year at $9. It went to 18.
Yeah.
Now it's all the way back at 7. So it's you've got to be buying it down here I think is really good value. But obviously this is what sort of the one if it goes on a run, you need to be taking
Ready
some
to
profits
take some profits on the way
up.
So it's still going to be a pretty wild ride.
I think so, yeah. I mean, we saw the likes of Cameco fall like 30, which is the second biggest uranium producer, fell like 40% and then went straight back through record highs.
Right.
So it's not a set and forget trade.
Right.
You can't just sit there and just watch it grind higher. So probably it wouldn't be one necessarily that you would, if you're not watching the market closely and you get worried about volatility, probably not one for you. But yeah.
So
I think it's a buy here. Yeah.
Okay.
But it really, like I said, warning that it's not going to be necessarily a sleep at night sort of position.
Right. Okay. And keep watching it. Ben, what's your view on Paladin?
Yeah, I think they've had a production downgrade out in November, and the key lesson for us is you never own a mine in its ramp-up phase. I think in mining in general, there's no such thing as surprises to the upside, only surprises to the downside. It's a tricky business in general, and yeah, you just got to tread carefully around these ones which are trying to ramp up production. We've seen a bunch of others, Adriatics, suffer a similar fate. Fortescue's Iron Bridge, even the other day, Karoon came out with a production downgrade as well. So these things do happen. I think the jurisdictions that they operate in the majority-owned mine in Langer Heinrich in Namibia. I think some recent news around some companies operating in Africa reinforces the risks there. Namibia is probably a better jurisdiction than those other companies, but it's one that you've got to tread carefully around. And this Canadian acquisition of fission uranium, it's always a bit of a head scratcher If I was a shareholder in Paladin, which, we're not for the record, but why would we want management buying, in a huge, big deals, $1.2 billion deal or something, purely to diversify their asset base? As a shareholder in Paladin, you could go out and buy shares in Fission Uranium, unless there's some huge synergies, which I don't believe there is.
Right.
Then there's no point in diversifying for the sake of it. So just a few kind of red flags there. I think uranium as a thematic is probably going to be okay. Do you want to express your view through Paladin? Probably not for us. I'd probably just rather own the underlying commodity, as it does benefit from the tailwinds, but no production risk. It does have less leverage, but probably better.
So you go to the ETF?
Yeah, I'd probably just own the ETF or the underlying.
Right. Okay. All right. So a no from you on Paladin, but go to uranium ETF if you want exposure there. All right. That's our stock of the day.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.